Joining us right now with a read on China's economy is China Beige Book International CEO Shehzad Qazi. Good morning to you. You think actually things might be better in terms of potential thaw than maybe some of the rhetoric is suggesting?
Yeah, I think when you talk about, China policy coming out of the current administration, we're about close to a peak. The export controls that went into effect earlier this year were about the most aggressive action, I think, so far that you'll see. The outbound investment executive order was incredibly mild. Even on the export restrictions, you're seeing licenses being given out. And on the other end, of course, you're seeing a host of diplomatic events and meetings taking place. So I do think that we're headed towards something that is going to be much less tense than the last several years have been, at least in the short run.
Why do you say that, though? Because when you think about the China Select Committee being as outspoken as so many members of that committee have been, and when you think about the Republicans on one side, Democrats on the other, it just feels like the language is actually getting more heated, not less.
I fully agree that there's going to be a lot of grandstanding and the rhetoric is only going to get heated. But when we talk about actual action and specifically action that will affect companies or affect investors, one of the things that's become very clear is both the White House as well as Congress are really struggling to come up with legislation that is aggressive, quite frankly, in nature, that actually restricts investment in China, that actually forces companies to diversify out of China when it comes to critical supply chains. So a lot of those hard actions are just simply not on the table right now, and the probability of those being on the table anytime soon doesn't seem very high.
But let's say, what you're talking about, I think, is the proposal, or at least the suggestion or idea of what people are calling reverse CFIUS, right?
Correct.
Okay, so let's say reverse CFIUS is not in the offing. That may very well be, but you don't think that there's going to be enough political, if not like social pressure on multinational companies, especially American businesses, to really think about, A, diversifying their business, those who are in China, out of China, and those who are thinking about investing in China, saying, you know what, maybe I'm going to hold off. Less so in some ways because of the Chinese government, and more so because of the rhetoric out of Washington. At least it feels that way. It seems though that you're on the other side of this.
Look, all you have to do is look at what's happened in the last few months with the chip companies and their business associations out there, and the aggressive manner in which they've tried to push, the White House or Commerce Department away from taking aggressive measures which would restrict them from selling into China. So that's, I think, point number one. We've seen a similar thing happen on the outbound investment executive order with actual flows, capital flows into China. There's very serious pushback. So that's not happening necessarily. I think, yes, companies are looking to diversify out of China after what has happened to them because of zero COVID, also because of the way Chinese regulations around all sorts of things like data collection and information sharing is evolving. But there isn't a wholesale push that is happening because somehow there's pressure from D.C. or somehow there's social pressure. I wouldn't agree with that.
Do you think that's a mistake? We had Kyle Bass on the program yesterday who just thinks that everybody is wearing blinders. It's like we are wearing a mask over our eyes and that we're not seeing what's actually happening here and that we should be.
I think that's true in many regards. The companies are also wearing blinders because they've repeatedly failed this year, for example, and a lot of the investment banks have failed this year, for example, to figure out what's really going on in China. Call after call has been completely wrong. So forget about the policy side, where there clearly have been several misses and there's a lot of uncertainty. But really, just even on the economic front, there's a lot of flying blind, really.
But I think what I'm getting after is the larger sort of question about national security and from a U.S. perspective, whether American businesses should be investing in China.
Businesses are not in a position to make national security decisions. So this is where the policymakers come in. I've said this before, too, that Congress and other elected officials need to define what the red lines are. They need to define what the national security threats are in a very specific way and have legislation that addresses that. But you haven't seen that really happen as yet. So I don't think we can sit here and talk about what businesses should be doing when businesses are not being fully told what the red lines are.
Well, talking about red lines, what do you think the long-term risk is for U.S. business doing business there vis-a-vis Taiwan?
Look, I think conflict over Taiwan, a war over Taiwan, there's a likelihood that that happens, and it's as time goes by, I would assume the probability of that only goes up. Currently, I think businesses this is where they're lying to themselves and assuming that a conflict over Taiwan is something that can be completely avoided. That's probably not true. If that happens, that's going to be a massive hit. I mean, that is going to be one of the biggest conflicts we've seen post-World War II in terms of its importance between two major powers. So that's a long-term risk I think that needs to be prepared for and taken very, very seriously rather than just hoping that we never get there.